Hey, good morning, everybody. How we doing out there? My name is Doc Severson. This is Ready, Set, Trade. Today is Friday, the 20th of January. Welcome aboard, everybody. We're trying a little experiment today. We have opened up the phone lines, if you will, and we're going to invite everybody that is a subscriber to this YouTube channel. So, want to see who shows up. And welcome aboard if you are new to us. Otherwise, we got work to do. Let's get on with it here and get our day started. So good morning, Ingrid, Scott, John as well too. So here we are. We have existing home sales coming out this morning at 10 o'clock. Not much else in the way of news. Not much in the way of earnings really either. That all starts with a bang next week. Well, no, it continues with a bang next week. So let's see. We had Netflix after hours yesterday. We'll look at that one in a minute. So this morning we had Ally and Schlumberger. So let's take a look at these. And typically what I will do is look at these through what's called a tick chart. Good morning, Brian. All right, so let's go out to a tick chart here. And a tick chart, what's great about that is that it doesn't waste a whole lot of candles, right? Overnight price action that doesn't print anything. We're just going to see a few candles. And then if we see a lot of volume, we see a lot of candles. So that tends to produce much better chart patterns. So let's look at Ally first of all. And Ally's up from 26 to 29. So a nice move. And Schlumberger. Let's look at Schlumberger is going from about 57.5 up to 58. Not much of a move so far. Let's see. Earnings were estimated at 68.5 cents. They came in at 74, so a nice beat on the bottom line. Don't know what the top line is. Sometimes that can generate quite a bit. Hey, Justin, welcome aboard. Good to see you. Glad you're here with us today. All right. So those are the earnings for today. Let's also look at Netflix from last night. Netflix actually is, kind of turned around the sentiment of this market. We've had kind of a sad face day the last 2 days. Markets have gone to the downside last couple of days, right at resistance. It was, we're wondering whether or not we're going to explode to the upside or lose it to the downside. Right now, the market voted to the downside for the last 2 days, but the uptrend is not over just yet until it parks in a lower high. So, again, Netflix going from about 315 up to 338, that's getting some notice. And what you'll see is that if we look over here at the futures, we have the NASDAQ is up almost 0.6% and is leading the market to the upside right now. So that's quite a change, right? From 2022, where the NASDAQ was leading the market to the downside the entire time. The last few weeks has seen the market to going to the upside. So again, we decided to open up our trading room. This is a live trading room that we do for elite members, and we do this every day. We've done this every day for the last 3 years, and actually this is the very first time that I've opened this up to the investing public just for a little bit of fun. Just decided to do something a little bit different today. So you guys are welcome to check in and see what we do every day. I'm also surrounded by some excellent traders who shall remain nameless, but I think you'll get the idea here pretty soon. Okay, so next week, things start to really ramp up. We have Tuesday is going to have Halliburton, GE, Johnson & Johnson, Lockheed Martin, 3M, Travelers, United Pacific, Verizon. And then afternoon, we have Capital One Finance, ISRG, Microsoft, Texas Instruments in the afternoon. So Tuesday is going to be a huge day for earnings, huge day for earnings. And then Wednesday, we're going to have IBM and Tesla in the afternoon as well, too, as well as Boeing Aerospace in the morning, General Dynamics, Abbott Labs, ADP, AT&T. So lots going on. And then this is where, oh, shame on me. I got to get my, I got to get my magic pen. I cannot draw without my magic pen. So let me get that going here. So we've also got, if you look down here at the very bottom line, If you look down at the bottom line, we have, at the same time that we have the Fed report on 2/1, we have the company formerly known as Facebook, which is Meta. And then we have, here, let me get my pen going so I can talk and annotate at the same time, which is a trick. Okay, so here we go. And then followed by up the next day, the day after the Fed, we have Apple, Amazon, Google reporting after hours as well, too. Justin, do we trade futures in the morning or stick to mainly stocks? I used to do futures quite a bit, and it sort of drove me nuts. Right? It brings out all the bad habits of me. So we mostly trade options in here. We mostly trade options, and most of the time we're focusing on the S&P. So I'll show you a couple of strategies that we do in here, and we look for just about every day, and I'll show you some of the numbers that we've been able to do lately. So it's we kind of stick to our knitting. We don't try to go broad based. When markets are really supportive and wide, as they were back in 2021, we used to cast a fairly wide net. We were all over the map in terms of SPACs. We were selling puts on SPACs, individual stocks. We were doing all kinds of credit spreads and things like that on the S&P 500. And during the bear market, what we find is that, with a general persistent down move, you want to sort of, stick to your knitting. And what we're doing is we're more sticking to shorter term trades, because you put yourself out there for 45 days, you've got a massive bullseye in your forehead, and you're going to get run over at some point. And so that's not fun. So we tend to go more short term, and we tend to stick to the S&P for right now. Fed funds futures are still pricing in for 2 weeks. Well, it's a little less than 2 weeks now. A 25 basis point rate hike, although there's been some drumbeat lately from punditry as well as some non-voting members of the Fed that said, by God, we should be doing a 50 basis point rate hike. And then we get a PPI report like we did the other day, which shows supply side inflation, which is dropping. And that makes no sense, right? And we see retail sales, which is dropping. And again, that comment doesn't make any sense to keep raising rates. So I don't know what these guys are thinking or smoking, whatever. All I know is I want some. So we get into the May timeframe. This is a net 50 basis point. So right now the futures market is only pricing in 2 additional 25 basis point rate hikes all the way into May. Good morning, Mark. Good morning, Len. All right, next week we'll be here Monday through Friday, 9:20 through 10:05, just like always. And today we're yellow light, iron fly. Yellow light because we're in corrective action. So we have to look for an opportunity to get in and get out. We are an extremely important tipping point, and this is going to set the tone, I think, for the rest of the year, whether or not we break out or we break down from this level. So off to the charts. We've got 60 seconds to go before everything breaks loose here. Okay, so looking at today, the expected move today is, and we don't want to use the 20 Jans. Those have already stopped trading, so we want to look at 20 Jan weeklies. And these are showing a 27-point expected move. We'll get that number here in about 40 seconds. Just a little bit less than 27 now. Looking at yesterday, we did a 0 DTE iron fly. At about 9:59 yesterday, we were out 7 minutes later at 10:06 with $50 a contract. So we took that. We were aggressive. We got in, got our fair share, and got out of there. And that's what we like to do. Okay, so what we're going to do, we're going to, we got the opening bell in 10 seconds here. There is a little bit of a delay between when I talk and you guys hear me. So we're going to look at this expected move. Here comes the bell. And we're going to start with 2707. 2707. And we're going to put this into our tracking. 27.07. And then we're going to go get our opening print for the S&P. So we'll go get that. And I'm going to use what's called a gap chart to do that. We're using a gap chart here. Okay. So welcome aboard. If you're just joining us here, this is Ready, Set, Trade. My name's Doc Severson. We just decided to open things up. This is our live trading room for our elite members today. You guys are welcome to join us for free. If you go to elite.readyset.trade, you can join the 10X tribe for free and then see kind of what we do. So our opening print here today, on today's print, is 39.30 on the ES, 39.30. So we're going to grab that opening print, 39.30. And what this does is gives us an upper and lower expected move for the day. So we're going to put this on our chart, and this becomes part of our, we don't believe in trading with a lot of indicators. It doesn't make sense to do this intraday. And so what we're going to do is we use price ranges like the opening range and the expected move and things like that. Okay, so if you see these blue lines, these represent yesterday's expected move, and they're not going to change all that much. This red line here, or this red box, is called the opening range, and that represents the first 30 minutes of price action. So I'm going to edit the properties of the upper expected move. We're going to change that to 3957.07. 3957.07, that's our upper expected move. And our lower expected move for the day is going to be 3902. We're going to hear lots of alerts going off, a lot of movement. 3902.93, 3902.93. Okay, so there we go. There is our, and we're just about to fill the gap here. We have a slight gap to the upside today. It looks like the S&P wants to fill that gap. And so what we're going to be doing is, since we have an expected move of plus and minus 27 points, we're going to be using a 30-wide iron fly. So what I'm going to do is go out to here on the SPX chain. Notice there's a 0 here. These are 0-day options. 0-day options. They expired today. And we're going to go slightly above where the price is now, about 39.15, and we're going to analyze selling an iron condor. And we're going to join these short strikes. If you don't understand what I'm saying, that's okay. You'll probably get it here in a second when I throw up a visual. And I'm going to go out 30 points. So 39.45 is going to be the call option. And again, since this is streamed on YouTube, if I'm going too fast for you, you can always watch this later. You can slow it down. You can rewind, pause. You can do all that stuff. You can dissect what we talk about here today. So that's 39.45 with the calls, and then I want to take the 39.15 center strike and go down 30 points from that. So that's going to be 38.85. And that gives me a credit of about $20, which is $2,000 if I do one contract of this trade. So there it is. There it is. And let's go ahead and just take the whole thing up here. So I normally will center these things. This is what an iron fly looks like. I will normally center these just above where the price is at. Now I'm a little bit high on this. That's okay, because we don't enter first thing in the morning. We typically want to see the opening range kind of set up and decide whether or not the price is range bound or whether it's trending. If it's trending, we don't want a strategy like this. And there's other strategies that we could trade. So generally, most of the time, the price is kind of range bound. It kind of waffles around, doesn't do much of anything. And the big advantage to a trade like this iron fly, is that it's very, very fast. So yesterday we got, 7 minutes? We had a 7-minute hold for $50 per contract. The day before that, I think we had something like a 5-minute hold. And we did like a 4-minute hold the other day. I mean, it's been super fast lately. So, well, there we go. Okay, so we'll keep an eye on this one for right now. It looks like we're about to fill that gap. Yes, we have. We filled the gap. So let's watch this. This is the market putting in the opening range. It's all over the map here, trading the opening range. Okay, so let's look at market internals. Let's see. So far we have Google and Microsoft look to be Doing okay. So what I want to do is to go out to the S&P sector spiders. And you can see the VIX is up today. We have communications is ripping today. And I think this is because of Netflix. This has to be because of Netflix. And if you look at, let's see. If you look at the holdings of the XLC ETF, it's mostly Meta, Alphabet. So this is Facebook, Google, Verizon, Disney, Charter, Netflix. So Netflix is only less than 5% of the holdings, but I think it's pushing everything else up because these are about to announce earnings in the next 2 weeks. And so this is providing a catalyst for that particular sector in the NASDAQ overall. So that's kind of why things are moving around this morning. And we also, at the same time, have energy getting drilled. We have real estate, utilities getting ripped apart. Tech is at least still positive for right now. Tech is still positive. Everything's moving around. The VIX is coming down a little bit. And we've gone back positive on the S&Ps. So looking at the Dow's only got 30 here. So we have American Express is up. Disney is up. So that's one reason. Microsoft is way up today, over 1.5%. So those are some of the better performers today. We also have Cisco, which is, again, part of tech, which is not doing well today. Apple is also not doing great, but it's not that bad. It's only down about 0.5%. We'll keep an eye on these. All right, I'm going to go bring up the market internals. Ooh, we're getting some RSI2 scans setting up. All right, market internals, what are we doing here today? Okay, we started out with a positive gap to the upside, right? Plus 250 out of the S&P. This is the 80 SPD. This is out of 500 stocks, which ones are advancing, how many are declining, and we've gone from 250 down past zero, and now we're kind of trending down. So we started out with a gap to the upside, and not particularly healthy so far. So we may be starting a little bit of a downtrend right now. Might be starting a little bit of a downtrend. So keep on your toes. Keep on your toes. Okay, does anybody have any questions? Everybody good? We take questions all morning, so. So yesterday was a little bit of a high wave candle. Today is a little bit of a dark cloud cover, but it's coming off the bottom. We're still positive on the S&Ps. So see if we can hang in there on this one. Now, we've got a little bit of work to do on the Russell trade here in a minute. Okay, so here's that iron fly. We'll just keep an eye on this one and see how the opening range goes. So what I want to do is I want to switch over here to the Russell. And this is a 5 DTE iron condor that we set up a few days ago, and now we've lost it to the downside. And if we look at the Russell chart, let's see what's going on here. We set this one up and kind of centered it around the fact that we thought that the price would stall out as it got up to 1900. Well, it did that and then some. It did that and then some. And I think what we need to do is we're going to pull down our call spreads. We're going to pull down our call spreads and reduce some risk on the trade. So these are great because they're risk reduced. It's not like a high probability iron condor where you're picking up nickels in front of the steamroller. You're getting a good credit for these things. The problem is that you don't have much room to work with. So you've got to adjust the trades as necessary. Right now, we're below that lower level. So what I'm going to do is roll down the call spreads. So first thing I want to do is I want to get rid of the current closing order because that's going to interfere with what I want to do. And then we're just going to go over to the Russell and find this. Here's our low probability iron, and I'm going to shut down the calls. Just going to close these calls, and we should be able to shut them down for next to nothing. So we're at 3 cent midpoint. I can try to get a 3 cent midpoint fill. I doubt that I'm going to be able to get that. So we're probably going to have to offer just a little bit more than that. So we'll come in, we'll just keep working this thing higher until we get a fill. Let's try 5 cents for this one. Probably will fill closer to 10 cents, which is still not that bad. And the nice thing about the Russell is these are penny-wide spreads. So we'll just work it up a couple of cents at a time. There we go. We got filled at 6 cents. So that was the magic number, was 6 cents. So we're closing down the old spreads at 6 cents. Well, what I want to do now, so that's the old representation of it. So what I'm going to do is I'm going to hide simulations. And now we just have a put credit spread, which is in the money. So now what I want to do is, let's go over to the trading tab. And let's see, these are 23 Jans, which I believe is that Monday? So now what I want to do is put in some call spreads, which are at the 25 delta, which is going to be, let's go with about the 29 delta here. So I'm going to sell a vertical, and we're going to come in with maybe as much as $1.25. So I'm going to try to get filled at the midpoint. So there we go. Okay, so it cost me 6 cents to get out. I just brought in another $1.14 net of credit. So instead of $2.50, instead of a $2.50 loss, we have a little bit less than that now. And I'm going to use a calculator because I don't want to screw up. Okay, something else just fired. Okay, so that's good. Okay, so 136 is now our risk on the trade. 136. Let's see what just fired here. Okay, 25 Jan puts. Bear with me a second here. Okay, looks like we're getting a little bit of a rally. So let's look over and see what we have now with our Russell trade. It's not showing on the analyzer very well, so let's not worry about that for right now. Okay. Let's put this into our 23 Jan, and there we go. Okay, let's go back to our iron fly. Look what's happening to our iron fly. This is what we set up right near the opening bell. And this thing has already decayed $103. Already shown $103 profit. Now, we typically don't do this. We typically don't put these things on. We let the range kind of show us whether or not the price is going to be range bound, first of all. Is the price going to be range bound or not? Some people like to enter these things right off the bat. And let's see. Mark, Docky said in last night's update that you might need to adjust the 23 Jan rut early on in the day, making it more difficult to adjust. Right, that's what I just did. So I pulled down that Russell trade. Pulled down the calls. And there's not much else I can do with that. So what we'll do is we'll look at, we have $136. So let's see. The credit that we got was $250 plus $114. So that's $364. And so what we'd look for in that trade is, let's go to the Russell trade. So what we're going to look for is still a $50 profit. Now this doesn't count. This is not down 248. But what we'll do is we're going to look for 364. So we're going to look for a 314 exit. So we're going to look for a 314 exit. Go till cancel. And there we go. Okay, back to our iron fly. Right now we have an opening range that's going from, it's about 18 points wide, 39.12 up to 39.30 so far. 39.12 to 39.30. Actually looks pretty good. So we're going to, as we get closer into 10 o'clock, we'll evaluate whether we want to take this one or not. Welcome aboard. If you're just joining us here at Ready Set Trade, this is our elite session that we do every morning from about 9:20 to about 10:05 or so. So we look for short-term opportunities in the markets. We're generally looking at the S&Ps for trades, and we talk smack at the Fed. That's what we do. Let's see what's moving now. Okay, we're getting slightly different movements here. Microsoft is still fairly strong. The Dow looks a little bit better than it did just a few minutes ago. Looked pretty awful. Looking at sector spiders right now, we still have communications up strong. Technology is still above water, and now financials are starting to turn around. The VIX is dropping like a stone. VIX is dropping. Now we do have a long iron condor, which is expiring today. We never got the movement from that one. We put this one on around Thanksgiving. So let's go out to the S&Ps here. Let's see, around Thanksgiving, we thought this thing would either explode to the upside or we'd see a huge sell-off, and we got neither of those outcomes. And actually, the long iron condor has probably been our most reliable trade over 2022. We would set these things up during high energy peaks down here. We'd set them up at low energy peaks up here. We set them up, back and forth. And just to give you an idea of how that works, for those of you that have heard of fractal energy, what we're looking for is either, high energy peaks like this. You can look at this almost like a fuel gauge, whether it's full up here or empty down here. And when something's full, it's about ready to bust a move. We're about ready to see a big move from these things. And that has been very reliable for us throughout the year. Every time we see a high energy level, this is where we look to do a long iron condor, and we step back from the short iron condors. Short iron condors are probably going to get run over at that point. Also, we had some exhaustion levels up here. This is an exhaustion level. Actually, it was also one down here, and this is where we get really aggressive selling premium during times like that. So let's take a larger look at the S&P for a second here with this. And what do we see happening here? Let's try this again. Okay. So what I've got are the fibs here. These are the fib retracements from the bottom up to the top. The bottom up to the top. And you can see the price kind of bottomed out yesterday around the 50% fib. Now, I think that it can go as far as the 61.8, which is also in confluence with this shelf of support, which was former resistance. And that's right around 38.60. So 38.60 has to hold for the bulls. Now, there's a couple of things that could happen from here. We could see a bounce back up. That bounce back up could continue. I don't know what would have to happen for that to continue higher. I really don't know what the positive catalyst is going to be other than everybody's short right now. That could be one thing. The other thing that we could see is a brief bounce up to a lower high, and then we lose it. That is a possibility as well, too. This is why I'm saying we're at a very, very important tipping point. You're kind of seeing this thing sort of work like this into an apex. And the more it does that, the more it winds up the spring, and eventually the eventual move from here gets to be bigger and bigger and bigger. So this is why I'm saying expect to see a fairly big move here relatively soon. I don't know which way it's going to go. And neither does anybody else. There's a lot of people have opinions about where they think it should go. I don't have any opinion in terms of where it should go. The market can do whatever it wants to do. And quite honestly, when everything starts to make sense and everybody, listen to what all the talking heads are saying right now. Everybody agrees that we're going to see a recession in 2023. Everybody is bearish right now. So listen for the voices that give the upside half of a chance, because I do agree with them. I do agree that we're probably going to see a recession. But don't forget that the economy is not the market. Market does not have to follow the economy. The economy typically follows the market. So the market's going to be leading the economy. And if it sees opportunity into the back half of 2023, it's going to take off. And everybody's going to be dumbfounded sitting there looking at this thing like, wait, that's not supposed to happen. So again, let the market move either way that it wants to. Set up limits for this. If it breaks above 40.15, that's going to be a strong move. That's going to be a big vote for an eventual breakout for this. However, if it breaks below 38.60, and especially if it breaks below 37.60 subsequently, then market's probably toast, and we're going to have to retest the lows. We may actually get that capitulation event, which has been missing from this bear so far. So that is my stump speech for right now. Okay, we have 5 minutes left to go. And we have a fairly choppy market. Look at this. It's been chopping around all day. Let's look at the market internals. What do we have here? What do we have? Okay. Market internals have turned around. We're back to zero now. We are back to zero. And ticks are generally above zero. Ticks are generally above zero. So we're not down here, we're not printing these mammoth negative 1,000 tick readings on the NYSE, which would indicate a program sell trade. We're not seeing those. So we just saw an attempt to fill the gap. That was successful. We successfully filled the gap. Now the market doesn't know what to do because all the events are really next week. Everything for the week is pretty much over in terms of direction. And it's a short weekend, which we're not used to now. We are not used to short weekends anymore. Anybody have any questions? Anything you want to bring up or anything like that? Or just, what are you doing? Or again, glad to see our visitors here today. You're welcome to sign up for free if you want to. If you go to elite.readyset.trade, you can sign up for free. Let me show you how to do that. And then if you want to take the next step forward, you can become an elite member. So this is what you get if you go over to elite.readyset.trade. So this is just our feed. So we're not trying to hide anything. You actually have access to a bunch of courses. To get into them, though, you would have to just sign in. All you got to do is to get a sign in. You get a whole bunch of stuff for free, and you can kind of see what it is that we do here and what kind of people we hang with. Now at 10 o'clock, what I want to be seeing is the price to be trading within the middle third of the opening range. So right now, we're getting a little too warm for me to be comfortable trading this thing right at this moment. So I want to be in the middle of the opening range. We're not there right now. But looking at this thing is this thing has already decayed $200 now. And we may have to go down to 25. So I'm actually going to do that. I'm going to bring this down to 25. So I'm going to bring in the wings by 5 points. Bring in the wings by 5 points, reset the credit. Credit's going to be lower. The risk is also lower. And there we go. So don't be afraid to adjust your wings depending on what you see. Don't be afraid to adjust your wings. But right now, it looks like we may be heading a little bit higher. It might be heading a little higher. It looks like we've done a U-turn in terms of internals. This does not look like a day where it's just going to sell off all day long. It looks like we're going to get range-bound behavior, but right now, the bulls are winning. Right now, the bulls are winning. Hi, Justin. What are my thoughts on range bars versus tick? I'm a tick bar guy. I just love tick charts. And I've experimented with range bars in the past, and I thought they were cool. And it's just another way to dynamically chart something. But quite honestly, I lean in favor of the tick charts. I had most of my experience with tick charts, trading futures early on, and I find they suit my eye. In fact, this is a 1,000 tick chart right now on the S&P. They suit my eye, and I find that if you get a good enough data feed, it just works for me. But if you like range bars, man, knock yourself out. This is what this whole business is about, is finding something that works for you. And I'm not going to tell you that there is one best thing. However, I will say that range or tick bars, to me, do it more than a time-based bar. I do not like looking at time-based intraday charts. They provide nothing to me. Okay, so here's our 10 o'clock. We've got our opening range printed. 10 o'clock, opening range printed. And this should turn yellow here in a second. And I think we're still good with a 39.15 center strike on this. I think we're still good with a 39.15 center strike. And So if we were to take this, again, the way that we do the trading sheet on this is let's say that we entered at 39.10 here. Then we're just going to use the tracking sheet to determine where the stops are. And in this case, the stops will be 38.83 and 39.37. And the way I would set these on here is to go to price slices. Again, I don't like automated stops because they will stop you out prematurely. So you can do conditional stops based on price if you want to, but it's going to be a market stop, and I would never do a market stop on an SPX trade. So again, 38.83 would be the lower stop for the trade, and then the upper stop would be 39.37 for this one. So that's if we entered right around 39.10 for this trade. And we should get fairly fast time decay on this, so usually less than about a 15-minute hold for these trades. I will typically not wait for the stop to get hit. In this type of market, if I see the trade or if I see the price going outside the opening range, then I will look for, right there it tells you it's no longer range bound. So I will look for ways to get out of the trade. So, okay, guys, if I see a trade entry here in the next, I'd say probably 10 minutes, I will publish it into the platform in the Elite membership. It's a little bit too narrow of a range today for me to just jump on this thing right now. It was a little strong, and I'm not sure where it's going right now, but if it stays within the middle third, right now it's not in the middle third. If it comes back down in the middle third and behaves itself, then I'll set up a trade here. And it's going to be the 25 wide. We're going to do 25 wide today. Okay, any last questions? Anything else? Thanks again for those of you that wandered by and are checking out the room. And I hope you decide to stay at some point. Even if it's for a free membership, just check us out. Okay, everybody have a great weekend, man. I will see you guys with tomorrow's newsletter and or on Monday morning as well, too. Okay? Thanks, everybody. You guys take care. Have a good one. Behave yourself. Be good. Bye now.